negotiating client offer, so I had to deal to real business first. So anyway, with that said, let's just kind of jump right in. I'm going to try and keep things kind of focused because I don't want to go super long on this, because if nothing else, I got to get back to that client offer to get that revised and get some people some houses. So just want to kind of just jump right in. We do have a lot to talk about, but I think it's some awesome stuff this week. Yeah, it's going to be repetitive. It always is, but we're going to talk about some market stats here that I think are very meaningful and hopefully relevant. So if you're as you're watching this, if you have questions, feel free to post them as comments. Even if you're watching this 3 days from now, you're watching the kind of the recorded version after the fact. If you have questions about anything that we talk about on here, or slides or thoughts, whatever, put them into the comments. We'll see them. I promise you we'll respond. We'll either respond to your comment, or if you say, hey, text me, email me, message me, just let us know. But if you got questions, don't hesitate. Don't feel like we don't want to talk about it starting tomorrow, because I'll talk about this stuff all day long. But anyway, all right, let's just jump right in. Hey, Jeff, how's the market? All right, here we go. Lockbox activity. This is every time Jeannie and I go show a house to somebody, we open the door, we pop the lockbox open, registers a hit, right? So this is your trend week over week. So we're up 37% from last week, which was up 30 some odd percent from the week before. So we're, the winter's over. Selling season has, the real estate season has started. The interesting part is if you look back, now we're at a point they've adjusted this graph. Now at the far left, that first data point, that is kind of on the like kind timing from a year ago. So if you look back to last year, we are off pace. That's the interesting part in my mind, because God knows I'm not feeling it right now. I think we've got a lot of signs saying this is going to be an even more ridiculous year, and we'll talk about here coming up why. But anyway, so yeah, the lockbox activity is surging, but off pace from last year slightly. Across the river up in Washington, same thing, up 33%, roughly on pace with last year. So, not too surprising there. So, there you go. And I'm skipping these because these are the boring slides today. So this past week, the December stats came out, so we got to see kind of what the December market looked like here in the Portland metro area. $514,000 was the average sales price in the Portland metro area. So down slightly from the prior month, an insignificant amount, but year over year, 12.5% up, which is incredible. So it's not sustainable, this level of growth. But there definitely has been a surge. That surge will continue during this year. I don't think we're going to see 12% again when we're talking December 21, but it's going to be something higher, significantly for sure. The market is continuing to accelerate. 40 days on average of home sitting compared to 41 in November, but is down from 64 a year ago. So the market is dramatically faster, simply because there's just that lack of homes. So closed sales, yeah, great. Let's jump to the months of inventory. This is the story that needs to be talked about. We are at 0.8 months. It wasn't that long ago. I was talking at 1.1 months. Hey, it's the lowest ever that Portland's ever seen. And then we hit 1 month. It's the lowest ever that Portland's ever seen. 0.8. So let's put this in real terms. In the Portland metro area, if at this pace of sales, and I guess this goes back to the closed sales, 26%. Okay, great. So we have to talk about that. Fine. But at the current pace of sales, if nobody else listed a house for sale in the Portland metro area, everything would be sold in roughly 3 weeks, which is absolutely insane. So that's what's driving our pricing up. There is a frenzy. There is a shortage. And you hear me talk all the time. This whole thing boils down to supply and its demand. The demand is ridiculously high because people are moving here. Mortgage rates are at historic lows, and we're going to talk about all these things. COVID has made people realize I need a bigger house, I need a better house, I need a better yard, I need a home office, I need a gym, whatever. There's solid demand. And then on the supply side, there's no homes. There's just not enough homes for the people that are here for what people want. And with the urban growth boundary, it's hard to ever offset that supply problem. So my guess, if you're going to quote me on anything, I think we have this problem for at least the next 5 years. Affordability will become a problem. Mortgage rates will go up. So the rate of things will soften, which is not necessarily a bad thing. We're going to talk about that in a little bit of how this is all going to show up in the media in terms of people saying the market is softening, things are slowing. It sounds scary, but I got a slide that's made me laugh when I saw it. So I'm going to share the graphic because it's just pretty stupid, but it made me laugh. So I'm going to share it. So anyway, that's your Portland metro area market. So $514,000 is your average home price in the Portland metro area. You're up 12%, up 12%. So who wants to do the math? We're 55, 60 grand up in value year over year. So if you bought a house a year ago, you're probably on average up, 60 grand in real equity, real wealth for you and your family, simply because you bought a house to live in. That's it, end of story. So that's pretty bad. In terms of the inventory, 0.8 months. That's ridiculous. So we are going to talk about Southwest Washington. So Vancouver, Camas, Washougal. We do work up there. We do help people buy and sell homes on that side of the river. So if you know somebody who needs some help, we're right here. Love to help them. So surely it's better across the river because it's just Vancouver, Washougal, Camas, right? Just go to the bottom right, 0.6 months. They're a little over 2 weeks of inventory. Those average sale price, the price acceleration is even higher than Portland. It's around 13% year over year. They're up even from last month, so $467,000. It wasn't that long ago that people were talking about, I'm going to go to Vancouver because the houses are significantly more affordable. It's easier to find a house, on and on and on. Well, it's not. All right, 34 days on market, 6 days faster than it is here in the Portland metro area. The prices are not that far off from here. They are accelerating more rapidly, and they have less inventory. Granted, they have more opportunity to do construction and adding more homes, and they are building like crazy up there. But a lot of the benefit for opting for the Washington side, other than the Oregon side, is starting to erode, unless you're looking at it from the standpoint of work from home, from a remote company, and now you can hang your hat for where you're working on the Washington side to save on the taxes, or people who are looking to retire, get away from the income tax there. So there are still some benefits, but it's definitely not nearly as much. So definitely want to share those Vancouver stats because it's and I will say, just anecdotally, the offer that I'm working on revising is for clients up in the Vancouver side over in Washougal, and Vancouver's brutal. The market is moving so fast. It's kind of fun. It's frustrating. Thank God I already drink. It's fever pitched up there. It's tough in Portland. It's ridiculous in Vancouver. So just kind of know that that's out there. So all right. So one conversation point that we get into from time to time with people as we talk about the market and how fast things are going and the sales shooting through the roof and prices and so on and so forth, people are like, it's just a bubble again. This is all going to go south. We're poised for things to go drastically wrong. And surely we're going to start seeing foreclosures, right? You had COVID, people aren't working, blah, 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 right? So let's talk about where we're at on the foreclosure basis for the country. Here's your look back. This is the lowest level of foreclosures in the last, I think, was it 16 years, 14 years, last long time. How about that? You see in the middle the Great Recession that popped up, but even in the years prior to the Great Recession. So look at the first bar compared to the last bar. We are drastically lower, 0.16%. So foreclosures just aren't happening. And why is that, right? As your prices are going up, that home value is going up. So if people get into a pinch and they need to sell their house, they can sell the house and still make money on the exit from home ownership. So they're not having the risk of foreclosure or a short sale or just abandoning the house because it just makes more sense that way. There's upside. You have that cushion. Other people then, and I don't want to say the smart people because I don't mean it to be degrading, but if you're in a house and the value has shot up like that, go ahead and establish a home equity line of credit on your house. Even if you don't pull any money off it, just have it in place. It's probably going to cost you $100 a year just to have the facility there. But then if something happens, you lose your job for a couple months, your hours get cut, whatever the case may be, you've got a piggy bank you can tap into to borrow funds to help offset. Then when you get back working, you pay yourself back. You're just borrowing against your house. Don't go crazy with it. Don't buy the RV. Don't buy a boat with it. But it's a safety cushion, and that's why I think you're seeing a lot of people are able to do that now. So thus these foreclosure rates are through the roof. So that's on a national basis, but when you dig into that article, it does talk about the best declines in foreclosure starts from the prior year. Number one mention, Oregon. We're down 79% from that's just from last year. So in the midst of COVID, and a global pandemic, a lot of people not working, a lot of hardship for us here in the state. 79% fewer foreclosures initiated during the calendar year 2020. So just let that soak in. That's how resilient people have been able to be from home ownership standpoint, mostly because we talk about the demographics say that the people impacted by COVID tend to not be homeowners as much. So that definitely helps. But then also having that equity level in the home has been a huge godsend. So Oregon leading the path on that. You guys keep making those mortgage payments. Values are going to the moon. Everybody's secure. So right on. So again, quick reminder, if you're watching this live, if you got questions, you want to heckle me, you got a good joke for me, other comments, if you put them in, I'll see them on this side. So pop them in. We'll even respond to it after the fact. So there you go. All right. This study came up to this, and we see these pop up from time to time of what states are a net migration in versus net migration out kind of thing. And it pops up from time to time. We talked for a while back about Oregon being a net inflow of migration from a census standpoint. For a brief period, it was showing as an exodus, but then you start doing the math of like who's saying that. And those are all U-Haul studies. So, and again, I don't want to paint too many stereotypes, but I think if you're kind of that corporate relocation type person, you're not doing it via U-Haul, right? You're going to do it more like a United Van Line, kind of corporate mover. But in either case, this study came out for 2020. The yellow states are exodus states, so no question that California lights up yellow. A lot of people from the Bay Area at least made a run for the hills, as Twitter basically announced, work from wherever. I'm surprised that Colorado is not a dark blue state, but I know a lot of people went there. A lot of people went to Austin, so Texas kind of surprises me as well. But Oregon for sure is a net positive on the migration standpoint. So if we show then kind of how that breaks down, and this, I just found it interesting. In the upper right corner, total inbound 63%, total outbound 38%. So we're net positive for sure. And then it's just kind of fun seeing kind of the reasons of why people were coming here. Health is a big reason, right? It's the lifestyle. People want to, the outdoors, the green, the surroundings. The rest of it's just noise. The job moves is roughly a break even. Lifestyle and health are the big ones, which no big shock. Family is kind of pushing people out of the state, which I guess maybe it makes sense if you want to get closer to grandparents and they don't want to be in the wet climate. Retirement's kind of a push, and that one does surprise me a little bit. But I did dial into the age ranges and income. There's just nothing fascinating to talk about. The age ranges, the big source of the inflow are those up to, I think it's up to 34. So we are picking the millennials. So they are coming, and millennials are in the home buying stage. So, for what that's worth, positive influx on people here. So I talked earlier about some of these articles that pop out about the market cooling and skies falling, and things are going to soften next year, and it sounds scary and whatnot. And this is a slide that just made me laugh, right? Because the headline here, it's losing steam, right? Asking price has slowed since its peak from July. Okay, so the peak in July, is somewhere around the 16-17% growth. And now if you look at where it is in January 21, it's only like 14.5%. It's the stupidest thing. So we're losing steam, but we're still a 14% asking price growth. So stop. It's double digits. It's ridiculous. It can be cut in half, and it's still 7%, which is fantastic. So I just share this. You'll see the headlines. I encourage you, please read the articles because they're going to talk about things are cooling, and all it's going to mean is the fever, the fever dreams we're having right now of double digit growth. It is going to taper off, of course, right? It can't be double digits forever, and nobody wants it to be because the affordability would crater, in excess of job creation and so forth. But read the article because even like I said, even if these things kind of cut in half, it's still super good. So let's talk more, I guess, kind of as my long-term, as I talk about, I continue to be very, very positive on the outlook for Oregon in general, for sure. But, let's factor out Medford and Bend and some of these destination places. For the Portland metro area, I'm a huge believer in owning real estate here on a long-term wealth creation standpoint. And here's kind of a big reason why. This article came out with metro areas that had the most new $1 million cities. So, where you've got, I don't know if it was an average home price in the millions, I think it was. So kind of, if you look at, they popped up, here's where they tend to be, right? So right out of the gate, we don't have to even study this. Don't have to read the article if you don't want to. Visually, what do you see? It's West Coast or it's East Coast. This is not happening in the middle of the country because it's, again, that net migration, the census thing. California's going to be California. They're always going to stay crazy. But it's where do people want to be, right? It's West Coast. Right now, Pacific Northwest, you just have Seattle is representing. So Seattle, Bellevue, all those areas are continuing to go crazy. California for sure. But then the interesting part is most of these areas tend to be on the West Coast. Most of them obviously in California. And if you think about major metropolitan areas with a significant job infrastructure in place, think Nike, think Intel, Silicon Forest, and so forth. One area is missing is Oregon. We are the last affordable big West Coast city with a reasonable job base. So I think we have nowhere to go but up. We're not at that critical point where you can make the argument that this is probably not a good thing to be on this slide being called out because you're super expensive. But it's probably more benefit to not being on there if you've got reasons to think we probably could be at some point, and we probably will be at some point. So I just thought that was kind of interesting and worth watching. So otherwise, kind of last handful of slides I want to talk about that I think are kind of interesting. The National Association of Realtors, they're always updating their projections and outlooks and so forth. And so they put out this U.S. economic outlook, kind of their forecast for next year, and just a handful of things that I just want to say, this is as they're reading the tea leaves for what to expect for this coming year, right? GDP recovering, 4% growth, which is great, 4% off a down year, so it's still probably a net negative, but it's positive. So I'll take a positive negative, something like that any day. Unemployment, they're looking for that to continue to trend down, so that's a good thing. That's going to come with it, with the vaccine rollout, getting people back to work. But let's look at the some of the housing indicators. So home sales expect to be up 9.5% this year. Let's go back to those first couple of slides of 0.8 months of inventory in Portland, 0.6 months in Vancouver, and sales are going to be up 9.5%. Look for this to turn more gray during the year because it's going to be absolutely crazy. Housing starts, they are going to be up double digits. We're not going to see that in Portland because we don't have the dirt, but then home prices. Here's where you see sort of that cooling effect, right? So they're forecasting to be about 7.8% growth in home values this year for the national average type of thing. New home prices up 1.8%. Then if you look at the 2021 forecast, 4.5% next year. So we're going to talk about some of this math here in a second, but so definitely a cooling, but 4.5% growth on prices, that's a good number, right? 4.7 is sort of the what I would call your 20-year average for the Portland metro area. So 4.5, it's Portland will be higher than that. I can just assure you on that part. But we'll just have to see where it's going to be. So they're definitely saying it won't be as high pitched on price increases on a national basis. Locally, who knows? So, but all things are definitely going to be pointing positive. All right, last few slides, we're going to wrap this one up. Freddie Mac put out their forecast. This is, again, on a national basis, right? But there's certain things that matter here, right? So I want to kind of talk about this for a second. So the biggest one is that first bullet point, mortgage rates. Expecting it to be about 2.9% on average by the end of this year. It's about 2.7 right now is the new current average. So ticking up, call it a quarter point, 3.2% in 2022. So they're projecting basically, we've seen the bottom. The mortgage rates are going to start to slow crawl back up. And then the second bullet point there, I'm done on this slide. They're projecting home price. This is, again, national average, 5.5%, call it 5.4 for this year, 3% for next year. So let's just talk about 5.4% for this year, 3% for next year as a mathematical average. Let's just say that that's exactly what Portland is going to be. Again, I think we're going to far exceed those, but let's just kind of go with the average here. Our current average price in Portland is $514,000. If we go 5.4% during this year, average prices are going to go up. I'm just going to round number this thing, $28,000. You'll have 3% on top of that the year following, $16,000. So your average price at the end of 2022, if we only hit those national averages that Freddie Mac is projecting, $558,000. So you buy a house today, you would go to sell it in 2 years based off this, you've made $44,000. And that's if we hit the national mathematical average, which that's going to be a soft number for sure. So so that's 2 years, $44,000 on a softball national average. That's factoring in Dubuque, Iowa. As I keep saying Dubuque, I don't know if that's even a real city, but all those Midwest places where you saw it not lighting up on those earlier slides. So I think we're going to be higher than that, but that's the trend to expect. The downside now is mortgage rates by 2 years will be higher, so that the affordability gets a little bit cramped. But this is what I keep talking about with people of home ownership, or especially if you're looking to be a first-time buyer. This is meaningful stuff. And if you've got people who are thinking now's a good time to take my chips off the table, I'm going to rent for a couple of years, wait for this to all blow over and kind of cool off, as they sit at the Winchester, it's a bad bet. You're going to get left behind. Prices are going to continue to climb. If you try to jump back in after renting for a period, it's going to cost you, and you'll go backwards. Lastly, just these headlines are popping up left and right, so I'm just signaling people just be aware that I think we have seen the bottoming out of the mortgage rates. We got the Feds talking about, hey, possible second half of next year, for a marked increase on baseline rates, which definitely would push the rates up. But then they're already trending up, right? So as soon as the Fed starts talking about, hey, next year we're probably going to start making some moves, you're going to start seeing forward pricing pressures on the mortgage standpoint. So just look for, I think we probably have bottomed out. So for those who are able to get refis in at the bottom, good for you. You've done it. Those who are looking to buy, it's going to get a little bit more expensive on the mortgage rate. It's not going to scuttle the math that much, but just know that that's a significant time to be making an investment in real estate. Probably for the next, I think rates are going to stay great for the next 3 years. So there you go. That's the end of our discussion. I thought I could get through this faster. I'm still 22 minutes. Sorry. Anyway, that's your update. Hope you guys all have a great week. If you have any questions about anything we talked about, I know I'm talking a mile a minute. That was just me trying to go fast. So God help us if I go slow. Have a good week. We'll talk to you soon. Take care.